What is the cost of providing a service? This module introduces ways to answer that question. Cost analysis is the use of specific financial information about a service to assist in making management decisions. That information is cost. Cost is more than just the money spent directly for that service, say an HIV testing service. The budget for a service usually reflects its direct costs, but there is often other money that is spent on behalf of a service that might not appear in the service's budget. Perhaps it's the rental price for the building that shows up somewhere else in the clinic's budget, such as the front office budget, but just not in the separate HIV testing service unit. In that case, rent would be an indirect cost, but only the percentage of rent that represents the part of the building that is used by the HIV testing service. Cost analysis is the process of compiling and organizing that information so you can determine a cost per unit of service, such as a cost per shot. Cost analysis also helps in the setting of fees or charges because you'll know what amount of revenue is required to break even per shot. It's also easier to evaluate whether to increase or decrease the level of a service by knowing if the cost justifies that change. Cost classification refers to how a cost is assigned. A cost can be classified as either direct or indirect. It helps to refer to the total cost, which is a combination of both. Cost behavior is how a cost reacts to changes in the level of production activity. As we will see, those costs are generally either a fixed cost that doesn't vary with the level of service, or a variable cost that does vary with each unit of service. Doing cost analysis depends upon the focus of attention, or your unit of analysis. Do you want to determine the cost for an entire function or program, such as testing services? Or is your inquiry more precise, such as for lab sample transport? The more micro-oriented, the better, but it also makes tracing costs more dependent upon excellent, detailed accounting records. Managers and supervisors need to be held accountable for the work of their service entity. It's much easier to hold them accountable for costs they can control, but it's hard for them to be responsible for costs that they have no control over. For example, assigning to their lab a share of the building rent makes sense in determining the total cost of the lab, but rent's not likely to be something they can control. The higher the rent, the more the lab's services will cost to deliver. What if rent is 20% of the total of the lab's costs, and the rent's fixed for several more years? If the lab has to cut its budget, then more of the cuts will have to come from non-rent expenditures or direct spending on programs. Direct costs are costs which can be easily and conveniently traced to a particular product, department, or activity. Examples include the cost of test kits to test clients for HIV, or the cost of gasoline used in transporting test samples. Indirect costs are those that must be allocated in order to be assigned to a particular product, department, or activity. Examples include the cost of the front office manager or the cost of building space. These costs could be assigned based upon the percentage of a building's total square footage. First, we determine how much square footage is devoted to a particular lab room that performs a testing service. Take that square footage and divide it by the total building square footage. The resulting percentage can be used as the percent of rent costs that would be allocated to that service. Another allocation method, say for the front office manager, is based upon the percentage of time devoted to supervising that particular lab versus all the other duties of the manager. In determining cost behavior, it helps to identify cost drivers. For example, the cost of lab sample transport is driven by the number of locations that the transport has to visit, and the number of trips that must be made. Another example would be the case of HIV testing, where the number of patients and the number of tests, especially if there's more than one test per patient that can occur, goes a long way in determining the cost of HIV testing. Thus, it helps to understand these cost drivers. Another way to look at cost behaviors is to consider them in terms of their fixed or variable natures. Variable costs vary with the level of activity production. For example, as the number of shots increase, the number of needles used in giving those shots will increase. But the needle cost per shot will remain the same over a range of activity. At some higher point of volume, however, it might be possible to buy a much bigger box of needles at a lower per unit price, thereby driving your lab's cost per shot lower. Fixed costs remain the same even when the activity levels change. Rent doesn't change until you need a larger or different space. However, the fixed cost per unit goes down as the activity level goes up. For example, divide the fixed rent by the number of activities. $1,000 in rent divided by 250 shots equals $4 per shot. But $1,000 in rent divided by 500 shots lowers it to $2 per shot. This graph shows an illustration of fixed costs staying the same over a change in activity. As the number of patients increases, plotted on the x-axis, the monthly rent, plotted on the y-axis, stays the same. There's a variation of this fixed cost termed step fixed costs. That's where costs that are fixed between two service level points will change after a certain point. For example, the cost of a lab technician is a fixed part of the cost up to a point. Say that 500 HIV tests per month can be performed by one lab technician. Once the volume exceeds 500, a second lab technician will have to be hired. This shows that fixed costs hold for a period of 1 to 500 tests, but even fixed costs are subject to change at some point. This graph shows the curve that as the number of patients increases, the average monthly rent per patient decreases. A variable cost graph shows that as the number of shots administered increases, needle expense increases 1 for 1. That curve holds until you can get a price break on your per needle price by buying a higher volume of them, since most vendors do give a price break for buying in bulk. In summary, managers gain valuable insights into their business and services by considering cost behavior and how changes can impact the costs of services.